Hey everyone, this is Richard, CEO of altFINS. In today's trading video, I will begin with just a quick outlook. Why am I bullish on crypto and risk assets for the rest of the year? And with that, I'll look at some macro data points, such as the recent jobs data, as well as the interest rates. Then I'll look at the state of the market real quick, where we are in terms of the pullback, and then look at some trading opportunities. Also, I would encourage you to become a member so you can join our VIP Telegram group where we discuss a lot of the best trading ideas out there. So let me start with some of the macro backdrop, right? So on Friday, we got the non-farm payroll data was out, and it was bad. The July 73,000 new jobs added in the US was well below the expected, I believe was 110,000. Not only that, the June and May data was revised, significantly revised downward. So if you look at the most recent year, I mean, these are the worst new jobs added in at least a year, but really the worst level since COVID, actually. These levels were so bad that the Trump administration decided to fire the manager or the lead person responsible for reporting these numbers. It's a bit of a shooting the messenger approach, reaction, but in any case, point is the economy in the US is showing signs of slowdown, right? And you would think that that's negative. It is, but it isn't. In that now for months we have been talking about, or the markets have been talking about the interest rates in the US being still too high. Let's take a look. All right, so these are the Fed fund rates. You may recall that the Fed, when the inflation shot up post-COVID, the Fed reacted by rapidly increasing interest rates, right? And this cooled the economy down significantly, but also, killed the market. If you remember, 2022, 2023 were pretty bad years, or relatively bad years for the stock market, and for crypto. 2022 was atrocious. So, and then things kind of stabilized. In 2024, the Fed cut interest rates a couple of times in September, October, or November and December, right? And the market rallied. Stock market and crypto market as well. Now, on top of that, you had the US elections here, but a big part of the rally was the outlook for lower interest rates, because lower interest rates mean higher valuations of assets in general, across the board, from bonds to stocks, crypto, real estate, and so on. It also means that, businesses can borrow at lower rates. Households can borrow and get mortgage loans at lower rates as well. So it really boosts the economy and boosts typically the valuations of, like I said, all assets in all categories. And so, since the end of last year, really for the next now 6-7 months, and likely another in August, 8 months, we've had no change in the Fed interest rates. The Fed's been careful about inflation data, especially regarding the tariffs, which they're fear that the tariffs could translate into higher inflation, which they have not recently, so far that is. And if anything, these high interest rates are certainly starting to weigh in negatively on the US economic growth, as seen in the jobs numbers, as seen as in other indicators as well, PMI and so on. So the point of all this is that the markets are starting to expect Fed rate cuts, maybe as early as September, maybe not until October, but that's not far away. That's only a couple of months away. And markets tend to anticipate these kinds of cuts. So we may get a rally again in crypto and the stock market, in the next few weeks, frankly, ahead of that potential Fed rate cut. In fact, yesterday, the stock markets were up quite a bit, exactly because of this, because of the anticipation that the worsening macroeconomic data, like the jobs data that we got on Friday, could actually be positive for the risk assets. I know it's difficult sometimes to wrap your mind around why bad economic data is positive for stocks, but it's exactly because of this, because of the anticipated lower or anticipated cut in interest rates. So if you look at yesterday's stock market reaction, S&P was up 1.5%. NASDAQ, which has a lot of the technology stocks, right, like NVIDIA, Microsoft, Google, Meta, and others, was up 2%, and the small cap 2000 stocks were up over 2% as well. And looks like today we're going to see continuation of that rally. So I think this will also translate into a big rally in crypto as well. Now, having said that, let's take a look at the situation in crypto. I mean, we've had a decent bounce. Now, this is the signal summary. These are a lot of various market filters and market scans that we have preset, and you can quickly get a bird's eye view of what's going on in the market, or go to some of the results of these market scans. But just to kind of look at from 3,000 feet above or 10,000 feet above, assets in the strong uptrend, out of 3,000, there's about 45 of them, and in a strong downtrend, 144. So there's still more assets in a downtrend than uptrend, but there's an improvement in this number. The market has certainly made some good improvements in the last month or two, as we've had some nice bullish movements. Assets that are in an uptrend, so not strong uptrend, because we have a trend rating that keeps up the trend ratings for 3,000 assets constantly. The strong up, is about 45, but up is about 93 versus 331 in downtrend still, right? So markets are still, relatively sort of bearish. We've seen many assets move up and inflect in terms of their trend, but many assets are still in a downtrend. Okay, now even in this sort of current pullback that we're experiencing, there's still always going to be a bull market somewhere. And one of my favorite strategies for finding some breakouts, it's this new local high indicator, which tells me, depending on which periods I use, so if I use 5 periods, then on a daily time interval right here, 5 periods means 5 days. If I'm on an hourly time period, that right here, then 5 periods means 5 hours, okay? There's going to be a whole different set of assets. So it depends on which time interval you prefer to trade on. If you want to trade frequently with a lot of changes, then you can go on the lower time interval, like the 1 hour or 4 hour time interval. If you have less time, or you want to trade a bit slower with bigger swings, then I stick to the daily time interval. So we can see that in the last, that there are 24 assets that have broken above their prior 5-day high. Let's take a look. Actually, I'm going to use the 10 period. So in the last 10 days, which assets are breaking above their prior prior highs. So again, what this market scan does, let me get rid of some stuff here, like the 50-day moving average we don't need. Let's keep the 200-day moving average. Now, so Litecoin is one where, as you can see, it rallied to about $120, got rejected there, pulled back, and now it's broken back above it. What that tells me is that, you know, the sellers, there was some selling, some supply at 120. Traders were taking profits, and that overwhelmed the buyers, you know, after the big move. But this big move here was completely retraced, which is very healthy. And now, you know, it looks like the asset or the price is ready to continue to rally. We've broken above the prior 120 or so dollar, you know, local high, and now we're making new local highs. So this looks like a nice candidate for a breakout. In terms of the next target, if we can look at a longer time interval. Longer time frame or time horizon to see sort of where's the resistance, the next resistance, and I think it's clear right here. It got rejected back in December, and again in January, and again in January, again in February, multiple times at 140, and that's where it's probably headed back to. Initially 130, I'd say, but then 140. So that's my upside. From call it right now it's at 124. So maybe another $16. So about 15% or so from these levels is my potential upside. So I would enter at these levels. I could enter half of my position and then another half position if the price comes back even closer to 120. Perhaps it retests this breakout. There's various breakout strategies that you can use. We explain those in our education course, trading education course, which you can find under the education section. Various, trade entry and breakout entry strategies that I'd encourage you to check it out. It's under the trading course. That would be right here, trading key levels, breakouts, and approaches. Okay, so under this lesson, there's multiple lessons, multiple sub-lessons or videos that you can watch on how to trade entry techniques to use for key level breakouts. Right there, 5-minute video, worth taking a look at and analyzing which approach is appropriate for you. But in any case, getting back to the situation. So it's RSI is at 70, so it's not, it's right on the border of overbought, but not crazy overbought. I think it can go certainly higher in terms of the RSI. We see the MACD crossover just happened as well, so that's bullish. So I can see this one in the next few days getting to 130. My initial price target at 140 potentially as well. And maybe move up my stop loss as I go up. Now, where to place the stop loss is a very critical part of trading is risk management, and stop loss is one of them. Trade size is another very important aspect of risk management. Again, something that we explain in the trading course. There's a whole lesson on it, on risk management. But, if I think that my upside is, from here about $16, $17, I tend to keep my reward to risk ratio, RRR, 2 to 1. So my reward, $16 or $17, should be twice as big as my potential loss. So if my reward is $17, half of that is about $8.50. So $8.50 from the current levels, if I subtract $8.50 from $124, call it, roughly $115 would be my stop loss level. So if the price moves below that, this trade was a bust and I move on to the next. I think that the probabilities are in my favor. this asset is in an uptrend across the board, short term, medium, long term. So I'm trading with the trend. So that's number one. It's above the 200-day moving average, which is also an indication of uptrend. It's not overbought, right? And I've got the MACD momentum bullish crossover as well. Multiple reasons why, and it's obviously broken above the recent resistance level. So multiple reasons why I believe that this is a good trade, but it still could go against me. So I'm gonna wage always a relatively small size trades. Never risk more than 2% of your portfolio on any given trade. That's another risk management rule. And use the stop losses. And the stop losses you can move up over time if the price goes in your favor. So that's that. I mean, you can look at all the results here. Obviously, Mantle was a nice breakout, similar situation. It's broken above the prior local high, and it's making nice moves. Maybe we've kind of missed this one. Also, check the trends. Are these, we can further modify this actually, but are these assets in an uptrend, right? Some of these are in a downtrend, strong downtrend. I wouldn't go long or buy breakouts for assets that are in a downtrend. I think those are potentially traps. But what I could do with this preset filter further, I could say, well, show me only those that are in an uptrend, at least on the medium term basis. So I can add that filter. Now I'm down to 9, okay? So I further narrowed it down. I can further narrow it down if I wanted also the long-term trend to be an uptrend. I tend to emphasize the medium-term trend for my trading. You could also further modify it and say, let's make sure that the RSI is not very overbought. Not okay. Let's just say it's below 80. Okay, that eliminated another 3, so I'm down to 6 now. Okay. Now what I can do with this obviously is create an alert. New local high. Okay. I'll say RSI under 80 and uptrend on a medium term basis. Okay. I can apply that alert only to my portfolio or my watch list if you have a watch list created, or just to any assets out of the 3,000 assets that the platform monitors. Okay, I save that. I can also save this filter, right? Now that I made some modifications, maybe I want to use this filter in the future. So let's go ahead and save it. New local high. Let's just say version 2. Okay, so now it's under my saved filters. Not only that, but it also appears under my preset filters now, right here. So I can quickly jump to that as well in the future. Sweet. You could also add it to your watch list, create a new watch list out of this and analyze it further. You can also check some patterns if there are some patterns available that the system has detected, and so on and so forth. So that's one of the neat ways to find some That's also a nice, neat way to find some breakouts and trading ideas using this platform. Another way would be certainly just go into the technical analysis section, where we actually maintain trade setups for about 50 assets, altcoins in the sort of the top 50 market cap. In fact, Litecoin is actually here. We feature it here as we talked about the breakout, right? And we show exactly where the resistance is, where's the next resistance, right? Which is where the price is likely to head as well. And we have a description of the setup as well in the text here. So that's another quick way of finding some trading ideas as well. All right, guys. Well, hope this has been helpful. Again, keep an eye in the next few months. If we're right about the interest rate direction, then I think it could be a massive run in crypto assets. And I'm preparing myself and portfolio for that potential big run as well, adding to some of my core positions and trading around some of the other positions as well. And keep in mind or keep an eye on your risk management. We could be wrong, right? No matter how much analysis we do, there could be some macro events, some black swan events that could totally throw things off track. So watch the risk management lesson in our education trading course. There's a risk management section right here. It talks about the appropriate way to size your trades, where to place the stop losses, and also the reward to risk ratio rule as well. Keep in mind that this video is for informational purposes only, not meant to be financial advice, and do your own research. Thank you and good luck trading.